you can see that the first thing that happened was the market opened, dropped down, and we bought it on the way back up. Just what I showed you actually on the S&P to how to trade an open. So we've obviously got the big level at $3. So we know that there's going to be an opportunity work against that $3 price level. Well, we got up there and the volume surged and we started to pin. So that was obviously a good opportunity for us to exit the first part of the trade at $3.60 at that stage. Well, we've just went from $3 to $3.60. Well, that's pretty good. That's 20%, right? So we've made 20% on the trade already. As the trade comes down, you can see there's no buyers come in. The volume drops right off of the trade until where? Until you see a surge in volume. If you see a surge in volume, what is that telling you? There's the buyers. So that's me. I'm going to join in now. I'm going to start bidding in with those buyers. The buyers disappear almost entirely. So we buy whatever's left in the trade at this price at $2.60. And then we get a run up to $4.20. $2.60 to $4.20 is $1.60 on a $2.60 product. $2.60 product, guys. Over 50%. We did 20% on the first trade, over 50% on the second trade. That's a 70% gain we've made on this one stock. Is that not pretty good? Now, obviously, everything's focused around this $3 share level. There seems to be still a lot of volume still to be had on this. So, you know, I'm going to be interested maybe in going again on this stock again and maybe make 100% my money again today. I think that's quite possible with this little share right now. I think there's a 100% gainer in it. The other stock that has an interest for us is Snap. The reason being is that it's also been upgraded by Truist this morning, and it's also had earnings, of course. I'm not really a mad fan of the earnings trades, but what happened on Snap was pretty obvious. You can see that on the earnings report, the gap opened up on Snap from $28 to $35. It pulled down. It started to reverse straight away. I started to buy into that story. We got a nice spike higher. It came back down. The volume kind of was quite high on the down candle, so I was quite keen on that. A bit of taper showing up here. So we were into the bottom edge price, started to buy into some Snap there. We managed to pick up some trade around about $34.90 and $36. $36.36 eventually on the Snap trade. So not a bad outcome. Not a bad outcome at all. Now, one of the things that you'll be able to recognize is that not every trade sets up. There's not a setup on every trade, but even this morning, most of the trades gave you some sort of setup. So this is stock number 2. It's Astrotech. Quite like that name, quite a good name, Astrotech. So you can see what happens. There's the open. So it starts gapping down, and you're waiting to see if anything happens. We've not got any big levels until $4.50. So obviously there's big liquidity at wholesale in these types of trades. So $4.50 is just there. So we traded $4.50, and it started to reject off the $4.50. So a buying opportunity to step in, right? Buying opportunity to step in. The volume had collapsed, and there was no sellers coming in. So we thought, well, you know what? If there's no sellers coming in, we'll take a pop at this. $4.50 runs up, huge volume in this candle. Usually a good excuse to book some profits and walk away at that stage. Perhaps that might be you finished for the whole day on that one. But that's not bad. You just went from $4.50 to $5.50. You just made $1 on a $4 stock, 20%. It's only taken you 4 minutes to make 20% on your account. Well, imagine, guys, if you're running a 10 grand account that we keep talking about, you've just made 20% in 4 minutes on a 10 grand account. That's 2 grand in your pocket. And that's if it was a 10 grand account. If it started a 10 grand account, we'd be talking somewhere in excess of, 100 grand at this stage, which means that one single little trade there is worth about 20 grand to you. 20 grand if you're a stock trader at that stage. It's just because it's a wholesale price level, Sam. On these rubbish stocks, like Stuart, sorry, on these rubbish stocks like Astrogen, the $4.50, the $4.25, the $4 levels, they're all going to be big areas for business. So when I'm sitting in the middle of a rubbish price like $4.87, it's going to be far better to be a buyer of $4.50. You know what I mean? or $4 or $3.50 or $3 because they're always going to have the bigger volumes at those prices. But it's not so much the $4.50, it's the rejection of the $4.50 that catches my attention. If I take this down even lower into a lower time frame chart at the cash open here, literally the cash open, do you see the volume surging on that, Stuart? So you can see on the downtick, do you see that big surge of volume on the downtick that stops the price right there? And then it goes up from that volume, and then it comes back down to retest on very, very low volume. See the difference? So if you're watching that, you'd have been seeing, number one, the size of the candle gets a lot smaller. Number two, you see that very, very low volume retest, same price, same area. And the takeaway from that was obviously delicious. We got a brilliant little takeaway from that stock at that point. And sure enough, we've managed to get an extra swing in this one, but I wasn't involved in that simply because, as I said, at that stage I was already heavily committed to the first stock, which was the first stock, which was TGC, because obviously we go in order, we go from number one upwards, and the number one stock's already made us our fortune today. We're already in the world of beautifulness. Now coming down, I might be interested in this. $3 is going to be something we're going to be watching again. We might be interested in it, but generally, as a rule, depending upon at this stage, what's happening in the broader market index. So one of the things you always do is you just overlay that with the S&P itself. You just take a look and see, is the S&P going up? If the S&P is going up during those periods, then you're more inclined to keep buying into those stories as it drops back down, right? So obviously, as this S&P is starting to top out, the question is this worthwhile buying on these downticks, or do I want to sweep the stops of the lows? And that's all you're doing. You're just watching for that liquidity to show up. You're watching this the same way as you watch every other stock at that point. And if the liquidity starts showing up on the buy side of the book, if the liquidity shows up on the buy side of the book at that stage, you might decide to step in, right? And that's a decision you make at the time. But I'm not playing it anymore. I'm finished with the stock, so I don't know what the answer is. I'm just waiting now for new information on whatever it is that we're trading. I generally trade these predominantly quite aggressively at the start of the day, but less aggressively as the day goes on. And if I'm in the trade and it stops out, that'll probably be it. I'll just finish up for the day. I won't do any more with those stocks.